Let's start again. Thanks everyone for joining to our August session, our SuitePath. Again, today we are going to talk regarding multi-booking feature, a brief overview on this functionality, how this can help us on different projects and customers, and also what cannot be done with this feature. Okay, I will start sharing my screen. Okay, so this guidance will be also shared with you after the meeting with the recording of our session. So which topics we are going to talk about today? We are going to talk about regarding how what is multi-booking, when we will be using it, how this definitely can help us on the different features that it has, and how it goes related to the different models that today we could be having in any environment, like amortization schedule, revenue recognition, fixed assets, etc. The common scenarios, and as well some suggestions and best practices over this functionality. And at the end, we will be having a Q&A moment for this. Okay, if you have also any questions in the middle, please type these questions into the Q&A section. Okay, so we will start with this session. What it will be multi-booking in this case. As a summary, multi-booking allows you to have a parallel accounting in accounting book or accounting management in one single system that will be NetSuite in our case. No, each book could have different rules, different currencies for the GL impact, for example, reporting reviews, and as well adjustments that we will be reviewing in a bit. Now, adjustments, then, for example, you have a local book that could be having a different balance, the exchange rate difference, than a corporate or a second book that is already defined. Okay. In addition, you can be posting just a single transaction, recording a journal entry, an invoice, a bill, payment, and multi-booking in automatic. Once it's saved, you will likely post this impact to all the accounting books that are enabled for this subsidiary. No, in a single sentence will be one action will allow us to have multiple compliant ledgers according with the requirements and necessities that each company could have. Why we use this? And this is also a simple diagram where we can see this. No, we will need to create a transaction, bill, invoice, journal entry. Internally, there will be accounting books created, and in automatic, a mirror according to the rules and configurations performance will be reflected with the GL for all the books, again, required for each subsidiary. No, I could be having 1, 2, 3 books for each, for one single company, for example. No, this will definitely reduce time on manual reconciliation that, for example, a company with multiple countries could be having to generate the corporate ledgers for example, the US or the CT. No, key concepts regarding this. No, when you will be having multi-booking, you will be hearing very much the words primary book, which will be our primary book, our official ledger or main ledger in all the accounting in NetSuite. All the subsidiaries will be always impacting to this primary book. Okay, this primary book will take always the currency that our subsidiary has configured in NetSuite. The secondary book will be the additional ledgers or the additional books that NetSuite could be having enabled. As maximum, we could be having 4 additional books in NetSuite. This giving us a total of 5 accounting books, including the primary one. If you need access on additional books, unfortunately, this is not able to be buy with NetSuite. So it's definitely very important that define properly which accounting books are required for the customer and why is the requirement for each. No? Parallel accounting, as I was mentioning, you will be having parallel accounting books during the in configuring NetSuite, no, for the same company or all the subsidiaries if required. Book specific mapping will be what NetSuite recalls global account mapping and item account mapping that we will be talking in a bit, directly making the reference to having multiple accounts to be synchronized or merged in a single account, for example, in a secondary book. And book-specific reference are settings or configurations that will be affecting to one single book. For example, a specific book-specific journal entries, rules for amortization schedules, for revenue recognition, for fixed asset depreciation as well. No, so this will be the book-specific preference that you will be able to configure according to the features that are enabled in NetSuite. And again, this is a brief overview in addition with the reports in how multi-booking works. No, we saw until the accounting book section where a single transaction can duplicate the accounting in separated books according to the rules for each. No, and at the end for financial reports, all of them will be shown in the same reports as, for example, balance sheet, P&L, trial balance. No, you will be able to generate these different reports, just select with the availability to select the accounting book that you want to recall. For example, if you need to see the balance sheet for, I don't know, for all the Latin countries, no, and you need to see this in, or for example, for Brazil, let's take us in a specific country example. You need to see this in real, in Brazilian real. You could be able to select if your subsidiary is in the local currency to see the primary book in the local currency. If you need to see this legal report or this financial report in the US currency and you have a secondary book in US dollar, you will be able to see it as well. No, every single transaction that is, and this is important, that is posted in the primary book can mirror in different other books with different accounting rules or adjustments according to what is applied on each book. Okay, so here I will pass to NetSuite to show you briefly how this is applied. Let's go first on the accounting books. So here we will be able to have, for example, I have here 6 accounting books now created. This is the important part, created. But in the status, I only have 4 accounting books active. So I could be having these 6 records created. The reply or the response over there will be yes. I can have the 6 of them active at the same time. The response over there will be no. Over here, well, I have inactive this one and I have this testing one as pending. So for NetSuite, it's not yet generating a GL impact on it. Once I enable or activate this, NetSuite won't be allowing me to activate another one. If I try to, NetSuite will give me another message that there's that task or that requirement cannot be executed due the fully accounting books license use. So we will need to decide to inactivate one to enable, to create or enable another one. No, but with all the internal reviews that this definitely will need. Now, I can be having these accounting books. For example, this is the primary one. I don't have a currency detail over here because it is taking directly the currency from the subsidiary. I recall the local currency book, for example, and I have here my base currency and the primary book currency. So in this scenario, the primary book currency is the currency from the subsidiary, and the base currency will be the currency for the accounting book. In this case, this configuration recalls for some countries to change the currency or generate the GL impact on the secondary book as the local currency from US dollar, for example. No? So this is what NetSuite will be doing. Now, there could be an important question in the middle. Which exchange rate will be taking NetSuite for this? And each transaction, and we will see a sample in a minute, NetSuite will be taking the exchange rate that the transaction is having at that moment. And we can change it directly before posting when we are recording it, as today is performed. Now, I can also create a specific books just for a specific subsidiaries. This means, for example, let's take a LATAM sample in Colombia. Some companies are required to manage the NIF accounting book. Not all the countries will be needing. So you can create a separated accounting book just for the Colombian subsidiary if required. Okay, so for example, here I only have two EMEA, APAC, and Canada. No one else. The other subsidiaries, as we were seeing over here, are not reflected because I do not enable this accounting book for it. And as well, I can enable or not the consolidation on these accounting books. Now, talking about the accounting book rules and the account mapping that we could be having, for example, this is what NetSuite recalls global accounting mapping, where I can say in the primary book, which will be my source account, I could be having different accounts to be reflected. But for specific books, I need, for example, over here, I need these two accounts when in the primary book are being impacted for Brazil. In the corporate book needs to be impacted to the 6180 account. So what NetSuite will be doing, and here I also have a sample. I have two accounts over here. NetSuite, when you are saving this transaction, will recall to these rules and say, okay, in the primary book, I have these accounts from Brazil. If I recall to the corporate book, I do not see anymore these accounts. I can see directly them as the corporate accounts, for example, no? And in this case, these are in US dollar. My primary book was in US dollar. Now, if I recall to the local currency, I can see that now my accounting is impacted in Brazilian real. Okay, so these are kind of the rules that NetSuite will be applying on this configuration, and the GL impact will be considered according to what is being recorded over here. NetSuite in automatic will bring or take the exchange rate that is registered in the currency exchange rate table. No, but if you wanna modify it directly in the transaction, the user will be able to do that. Now with the proper permissions over the role. Now, and this GL impact will be definitely that reflect in how the financial reports will be shown. For example, I will recall a P&L really fast, or the income statement, and I can recall, for example, my accounting period over here, and I have two accounts. And if I change this to the corporate book, I will be able to recall that the P&L is reflecting the corporate account, no longer the local account that my subsidiary has right now. Okay, so let's go back to our presentation. And now we will talk regarding the adjustments in multi-booking. Which kind of adjustments can be done directly on our in a book specific? For example, these book specific journal entries that I was mentioning, and for example, tax adjustments that the sample that I was giving at the beginning, a local book and a corporate book. For exchange rate difference, etc., there's an adjustment that is required to perform for the local book, but corporate book is fully balanced, is okay, the numbers should not be modified. There's where our book specific journal entry enter an action. We will be able to record this book specific journal entry just for the specific book that we need to adjust. And the idea of this transaction will be that it will be only generating an impact into the accounting book that I need. The other ones will remain as how the configuration and the transactions were impacted before. No? Directly how this will be working. We will select a target book into the journal entry, and that's it. The accounts that we need to impact for this specific book will be definitely required, but will be just an additional sample in a journal entry. Now, there could be another question that I also hear in some implementations. Can I make an invoice just being impacted in one book, not in others? The reply over there will be no. Unfortunately, the only transaction that in this case the user can record CSV, manually, etc., that can be only impacted in a specific book that we need is this journal entry. The invoices, bills, other kind of transactions will be always generating an impact into all the accounting books that are configured for the subsidiary. Now, how in this case, and this more than US will be more in countries with different currencies, no, than US dollar, for example. We will be having the currency revaluation and multi-booking. Currency revaluation will be just generated on the accounting books that is required to. Let's remember that we have two different samples or scenarios for the currency revaluation that is generated by NetSuite. For open balances revaluation, at the end of the month, one of the tasks that we'll be having, and the realized currency revaluation. In this case, when a payment or a credit is being recorded, no, over AP or AR. So NetSuite will be directly recognizing, for example, I have the sample over here for local currency and US dollar, no, but directly will be taking the consideration on the currency that is being impacted on the GL. So when this process is executed, it recognizes the exchange rate difference. Is there a difference in the local book, for example, or the local currency recording, if the exchange rate is not one? If the response is yes, for example, in this case for CLP or Chilean peso, it revalue the balances in Chilean peso, generate the posting for local gain and loss account, and is also reflected on these reports with the account that is definitely required on the accounting book, for example, local book in this case. If no, we'll go to recognize if there's a difference in US dollar or any other currency. No, if this difference is, if there's a difference on the values converted, so NetSuite will be generated a currency revaluation in US dollar, posted to the corporate book, for example, if needed, gain and loss account, and will generate the impact for the related reports on these accounts for gain and loss impact. Okay, And the overview of this impact as well on the GL will be able to be visible, and as well on the different financial reports as we were reviewing so far the income statement or P&L. No? How will be these revaluation steps? For the open balances, we will run the open foreign currency balances module, selecting the accounting book. Then the system internally will be recognized if there's a specific rule for the accounting books. And then according to this difference, the reports will be showing or reflecting the result of this currency revaluation transaction recorded for each accounting book. I have a sample over here of a currency revaluation already created by NetSuite. So for example, here I have a Mexican subsidiary in US dollar and my accounting book for local currency. If I try to look this currency revaluation number 17 in the primary book, I won't be able to see it over there. If I want to recall this in the corporate book, I won't be able either to see this transaction. And as you can see over here on the GL impact, I either have my option to see another accounting books because this currency revaluation for open balances, for example, is only being impacted in the local currency GAAP. Now, if I recall to my book specific journal entry, as you can see, is the same form of a formulary that I have for a regular journal entry, as I recall it. So the additional field that you will be having will be the accounting book. When you select this field, NetSuite in automatic recognize that is a book-specific journal entry if you are doing a CSV import and record this as a book-specific journal. If this field is empty, it's directly recorded in all the accounting books from the subsidiary selected. For example, this is USA, US dollar currency, and for the primary book adjustment only. Okay. Now, amortization schedules. We also are able to have in amortization schedules the availability to configure different rules per accounting book. Or if we need to generate the amortization only in one specific book and not, for example, the corporate, it also can be done without problems. No, over here, for example, I have the scenario over here for a prepaid invoice. We can generate and assign, in this case, the amortization schedule. We can mirror this amortization schedule to all the books or only one, and it will be, for example, here for local GAAP, I have an straight line rule for 12 months. And for IFRS, I have an accelerated rule for 8 months instead of 12. No, because each accounting book will be able to have or to manage its own rule as it, according to how the company will be requiring it. No, what NetSuite will be doing when these amortization schedules are executed, instead of creating a regular journal entry, we'll be creating a book-specific journal entry. No, so we can reflect, for example, if IFRS finished the amortization in 8 months, the local GAAP will continue doing the amortization until the 12 months are done. So the rest 4 months that are pending for local GAAP will be just reflected on the local book, and IFRS will remain as how the rule was configured. No, this is my sample of local GAAP and IFRS and the behavior that NetSuite will be taking for this sample to reflect these different rules in the separated books. For revenue recognition as well, we will be able to have different rules configured per accounting book. For example, there are some countries in Latin America that, or some companies that cannot recognize in Latin American countries revenue recognition rules, but the US team definitely needs to have for a company decision that a revenue recognition rule applied. So in this scenario, we could be having the primary book being impacted directly, posted on the revenue, and we can apply these rules to the corporate book without problems once or the rule apply once the transaction is saved. And this will be only recognized for the secondary book instead of impacting to both, to avoid any problem that maybe the LATAM country could be having, for example, okay, or the LATAM subsidiary. As well, we will be able to have in a single line item the registering of the item as well, the rule that is configured with this kind of criteria. Primary book with a specific criteria, secondary book or IFRS, for example, with a specific contract period rates handling, no? And local GAAP directly recognized at the delivery of the invoice, for example. An important tip over here as well, talking regarding revenue recognition always, is to validate, and this is also for amortization schedules, no? Always validate the rules that the customer will need in Sandbox. Fully validated, if this could be also with real scenarios that they are having, will be better. So the customer can, or the user can see how at the end NetSuite is generating the GL, the impact, the revenue recognition, the amortization generation for each book as well. So let's go back to NetSuite. And over here, for example, I will recall the other bill that I had sorted in moments ago. And here you will be having, for example, this update amortization button. So right now I have non-amortization rules applied over here, but I can update this. This will take me directly to a second screen. It's recalling which vendor is related and the bill in this case. And I can say which amortization schedule I need to assign for each line, and when will be starting, when will be finishing, and if I have a rule, and the residual amount if I need to have it. I could be configuring this for one single book, not necessarily all of them. That's why it's giving me the different lines that I have for this. Okay. Now, fixed assets and depreciations. As well, we could be having separated books, parallel accounting, but this parallel accounting, and this is something that I usually saw mostly in Colombia. They could be the company could be having a fixed asset, let's say a laptop, with 60-month lifetime and a cost of $3,000. Okay, this will be for the primary book, but in the secondary book, the company needs to recognize this laptop depreciation not in 60 months. It has to be in 45 months. And in addition, the cost won't be recognized as $3,000. Do some rule that they have internally, they can only recognize the depreciation over $2,000 in the sample. Okay, so what NetSuite will be allowing is we will be able to create the fixed asset. We can assign definitely the asset details, and we could be having the alternate depreciation method configured into our fixed asset. This alternate depreciation method will allow us to say, okay, the fixed asset record primarily in the first moment is only recognized for the primary book. All the rules like amount, the depreciation method, the lifetime, etc., will be always for the primary book. And the alternate method will allow us to assign the accounts that I need to see reflected, the amount to be recognizing for depreciation, the rule that I need to take in consideration for the depreciation, and the lifetime as well, with residual if we need to have it as well, for a specific book, as again, a rule for this depreciation exercise. No? So what NetSuite will be doing here is will be recognize if the asset type is related to any alternate method. If it's not, we can also create this as well directly for the fixed asset. But the recommendation will be always having this asset type with that alternate method configured if this will be always applying for all the assets that we are creating related to it. No? So once we create the asset, Nets will recognize. If there's none, an alternate method configured, Nets will be creating the fixed asset only for rules on depreciation for the primary book. But if there is at least one alternate method configured, NetSuite will be able to, to create the or mirror these asset depreciation rules for all the books that are configured. If I only have this configuration for primary and IFRS, not US GAAP, so NetSuite will be creating the depreciation rules only for these books, these two books, and US GAAP will be took out of the scenario for that specific asset type related on the asset in the fixed asset record. And according to these rules, once we run the depreciation exercise, NetSuite will definitely reflect the book-specific financial reports according to the book-specific journals that NetSuite automatically creates for the journal for the fixed asset depreciation, according on which rule each accounting book is having for the fixed asset that we create. Okay. For example, I have here this scenario that I was also sharing. No, like we have in local GAAP a straight line rule with 5 years on depreciation, no residual value. And I could be having the same fixed asset, but with the logic on IFRS with a straight line as well rule, but with 3 years on depreciation instead of five, and a residual value over here to be considered. No, so this kind of rules is what will help us to be handled with multi-booking. Now, what happened as well when the depreciation in IFRS finish? IFRS depreciation will be closed, the alternate method will be closed, and local GAAP will continue doing the depreciation process until the 5 years of depreciation are completed, or I downgrade the fixed asset as well on the specific local GAAP. Okay. So now I will go over here. Maybe you can recall where I can find this alternate depreciation method. Is over, the rules will be over here, and into here we will be having this kind of rules, and into the fixed assets I can recall to the tax method configured over here. For example, this asset do not have any depreciation rule or alternate depreciation rule configured. So what this will means, this fixed asset will be only depreciated on the primary book. The other accounting books won't be took in consideration because I don't have a rule configured for this. And as you can see, I have here the accounting book field where I can directly see or I can say, which accounting book should be considered for this alternate method that I can create and assign to the asset as well. Okay. So common scenarios that we could be having for this multi-booking with all the topics that we were reviewing so far during this session. Local GAAP versus corporate GAAP, for example, IFRS with US GAAP. No. Functional currency difference, for example, again, local Brazilian book versus corporate US dollar book. Tax reporting difference, local tax versus corporate tax adjustment, where the book-specific journal entries enter in action. and a historical exchange rate difference on consolidations as well. So how is the setup performed? This is a high overview, no? First, we will need to request this feature with NetSuite. As first, we need to send an email to the sell team, which is a specific team on NetSuite with focus on the multi-book feature. There's a form that we need to fulfill. If you have any question over this form, I can help you with this. Definitely, I can also share a sample of it on the when we send the recording of this session. And we need to wait until sell approval. This request is directly sent through email, so we need to push the reply from this team on this email. Once approved, we can, with this email, create a ticket with Oracle NetSuite as well, a support ticket to request the sandbox activation. First, NetSuite will be always enabling this feature in sandbox, no? And it's also recommended. Once everything is test validated, we can request then the migration of this feature to production. They will be enabling the feature in production, and we need to apply the configurations. Okay. Once this is done, we can enable multi-booking in NetSuite on the enable feature section on the accounting section. It always appears at the bottom of the page. Then we will be defining the accounting books. This will be a discovery session that definitely we need to have with the customer about it. Set the book specific preferences, for example, for a currency, the accounting method, the currency revaluation rules, for example. We can create, if apply, this global map and item account mapping for the account merging between books if it's required. The testing with sample transactions. Our unit test will be definitely dummies, but in the UAT, let's remember to always try to have real scenarios that the customer have to make them see how the result will be in NetSuite. Now, and definitely the training with the users and the customer team. An important matter over the request of multi-booking feature is that the sell approval can be only requested by a licensed user on multi-booking feature. Okay. If we have some users already certified or authorized by NetSuite for the multi-booking implementation in the Ring IT team, so we can recall them definitely, and we can also send this email, but including to this user in copy on the email as well. No, definitely do into this form that we need to fulfill. We need to assign the authorization code that this user has for the multi-booking feature. Okay. Some usage tips that we could be having for multi-booking. No, multi-book will always generate the first impact in the primary book and will generate an automatic the mirror for the other books. Always review the GL impact in the accounting book in all the books, before the periods are closed or locked. Use as book-specific books or reports for the local audits. And if you have, for example, a specific accounts, let's say local accounts and corporate accounts, the recommendation to avoid, like, for example, a corporate account reflected in the primary book under the local GAAP, or a local account reflected into the corporate book when it's not needed, we can also restrict these accounts into the configuration. And here I will be going back to NetSuite so you can see how this restriction can be. So I will take this one. And over here, we have a field where I can say restrict to accounting book. Right now, this account is not restricted, so I can use it in any accounting book that I want for the subsidiaries that is enabled. But if I log this to the primary book, this account won't be able to be selected, impacted in a secondary book, in another accounting book. Okay, and if there's not a global account mapping, for example, for corporate, NetSuite will be showing an error restricting the account to be reflected in another accounting book when we try to record any transaction. No, this is a recommendation according in for example, corporate teams that only needs to see in their financial reports the accounts defined for the corporation, not the local ones that any country could be having, for example, in an open detail like the tax classification or payroll accounts differences. Okay. Now, which kind of risk and best practices we could be having on over here? So, as a mapping and alignment risk, we could be having book mappings not fully aligned. For example, the sample that I was giving before, accounts without a mapping unrestricted, for example, for some accounting books. No, it could be generating issues during the recording of the transaction or wrong balances across the different books because the proper accounts that are required on each book, if we will be having a global mapping account, are not being properly recognized or reported. No, wrong primary book definition. This goes like corporate and local books are misaligned or wrongly impacted to this mapping and alignment of the accounts. Regarding the process and configurations, if we don't have these tax rules, local tax rules properly configured, there could be also compliance issues, talking directly regarding the legal reports that any subsidiary could be generated from NetSuite, because remember, every single legal report should be always generated over the GL impact that the accounting book that is recognized as local is defined. No, different exchange rate because the is not daily updated, being set manually, or any integration that it could be in the middle. It could be affecting the process because the revaluation could be wrong if the exchange rate is not updated. No, and these subledgers risks as well for revenue recognition or amortization. If we do not properly apply these rules in NetSuite, we won't be able either to have these book specific journals as well generated according to how should be impacted on each book. Okay, and as best practices, the first one over setup will be the log of account per book, if this applies, definitely. Always in the overview that you could be having for multi-booking, take in consideration which will be the chart of accounts with more accounts in detail. If the company decides all the countries or subsidiaries will be having the same chart of accounts, okay, there's no problem. But if we will be having to the primary to some subsidiaries with their country specific chart of accounts and also the corporate chart of accounts in NetSuite, the recommendation will be the chart of accounts with more detail on accounts to be set as the primary one to be used. And the secondary usually could be the corporate if the corporate is definitely the summarized chart of accounts as well. Okay. Then over testings and control, is a recommendation as well to test every single transaction type that we will be using in with the customer in Sandbox previous production migration, and always make the reconciliation between the deferred revenue and the prepaid balances, being set revenue recognition rules and amortization schedules per book before the accounting book is closed. No, Otherwise, if there's an adjustment to be done and the period is already closed, definitely will be needed to take decisions, opening the period or adjusting in the next month. No? And then the ledgers management, uh, this book specific depreciation schedules for compliance. For compliance, for example, the on the fixed asset side, and centralize the catalog of rules for revenue recognition and amortization to have this per book to comply properly with the criteria that each accounting book will need. Okay, so keep in consideration this always. One transaction will always have multiple compliant books because we will be having a parallel accounting. This functionality definitely will save for your customer time, will ensure compliance between the corporate criteria and the local criteria that or local requirements that each country could be having, and also supports global reporting, talking again this corporate side when a corporate team definitely will always want to have a clean financial reporting for decision making. And a success for us on the implementation will be a proper setup or a correct setup, a proper mapping, and always having properly trained to our users. Okay? We appreciate the time that you had to enter to this webinar this month. So, well, thanks again and hope you're having a nice end of the day. Bye-bye.